Okay, hey there. This is the PowerPoint presentation that I'm working on. I'm going to zip through it real quick just so you get a quick idea. If you know anybody who's technically savvy, like an 18-year-old kid or something that's into this, I want to turn it over to them because it's very boring, but it gets you the idea. So let me run through this. This is supply and demand. This is my stuff that I've been working on. So I don't care about that. Okay, what is it? I don't care about that. Okay, so supply and demand. As we all know, supply is up here and it's going to go down. And then if it breaks through the ceiling, it turns into a floor. Some people call it support and resistance, whatever the case may be. Supply and demand is what it is. And then I have price direction and trend. So there's three things that are made up. One is supply and demand. That's the areas. And then the price direction is which way it's going at the moment. It's not going sideways. It's rather going up or down. There's no sideways. It's either up or it's down. It could be up, down, but it's up or down. And then trend. And trend is just nothing more than higher highs and higher lows kind of thing. So price direction, I'm going to zip through all this stuff. Trend, I don't talk about that. Okay, higher highs, higher lows, we already know about that. Okay, so pivots. I think we already know about pivots. So in this case, we're looking for the high. You got the highest high, and once we find that highest high, we grab that area and go from there. Defining pivots. Okay, the gap trend. We have. I've been using minute trades lately, but it's the same thing. You've got your gap right there, and you've got one coming down. And then I think I go into the, okay, here's the pivot up trend. Okay, so higher highs, higher lows kind of thing, 1, 2, 1, 2, 1, 2 kind of thing. It's all programmed in here. So here's your higher highs, higher lows. Here is your entry zone based on higher highs and higher lows without a break. This is a smaller chart, 15 minutes, so you don't get a lot of them. But this is not designed, the 15-minute is what I've been using to determine my supply and demand. Once I'm in the demand area, then I go to a smaller, I'm using a 30-second chart to then trigger my higher high, higher low, or at least kind of get around there, even a minute chart, something like that. But this is an entry zone based on a 15 minutes. So I'm assuming then you have a zone that may be based on a minute or something. So you got to keep it in perspective. Again, we're looking at multiple time frames to get into that. So Helix 8.1 talks about trigger lines, gaps. Okay, I want to go about that. Love I want to get to the good stuff. Direction, we talk about up, down, all around. Change it from up to down. Okay, so here's your price changes. You could slow down and read these on your own. What differentiates a nuance? There you can read that. You can kind of slow it down on your own. I don't care about this. Okay, that settings. Okay, that's that. And the directions, supply and demand, and our multiple time frames. Okay, so I think this might be where it's starting from. Okay, so I have 6 numbers here. Number 1 is a long, 2 is a long, 3 is a long, and then 4, 5, and 6 are shorts. So in the life cycle of a trade, you're coming down to this demand level or resistance, whatever you want to call it. I call it demand only because this is where people want to buy stuff. And this is where people have the crap to sell. So you want to buy it here. And when you get a signal, whatever that is, whether it be, trigger lines or gaps or blah, 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 you come down to this area. And then at some point it starts to reverse and go up. It'd be beautiful if it did that exactly, but we all know it doesn't. So that's a number 1 trade. Okay. The second trade, as we all know, is on the way up. Now what happens is it typically hitting some moving averages and it's in the center. 9 times out of 10 and maybe 8 times out of 10 it will continue to go up after it creates a chop box and fiddle farts around, doesn't know what to do. In any event, it's already been down to demand. It's been down there and it needs to go higher because it needs to find buyers. So it's going to go up. Now it very well could be that it just goes up to here and then retraces and blows through that. We've seen it, but moral of the story is 9 times out of 10 we're going to be probably looking for a long in this scenario. When this sets up, let's call it a gap trade. So we have a gap down here. It's a number 1. It's at demand. That's the best high probability trade. Here's the second high probability trade. Okay, we're still going to go up, but we got to wait for that signal. So we get a gap. So it's fiddle farted around. It's made a chop box, done everything. It's come back around, done its gap, and now we got a signal to go up, and so we go north. Okay, and then here's another one. So now we're up at the top here, and of course it retraces back down and it comes up and we get a gap, and we get a gap long. Okay, do we want that one? Well, you certainly could take it, but the high probabilities are it's not gonna be successful once you start getting up to here. It could, but it also could very easily, have enough buyers there, and now it needs demand because all the suppliers are, they want more stuff and there's no stuff to have, so they got to come down and get demand. So this is how it's, written out, trend trade, I just want to kind of blow through that. And so I've labeled them. So here's like 3A. And then if it goes through, now we've got a 3B, or in essence, we just start the cycle all over again. And, the floor or the ceiling becomes the floor, and now we got a number 1. So in essence, it's a number 1 again, but we can call it a 3B because it just blew through. For algo purposes and things like that, coding, I'm not quite sure what's best, and that's going to take some of your expertise. But needless to say, regardless of what it is, that's the number 1, 2, 3, and 4, 5, 6. So now, if it goes up again, then we just start the cycle until the next. And one of these supply zones are gonna not give in, and they're going to want to come back down, and then you're going to get your coming down. And there's where you start your 4. So in this case, it's I can't do it. And let's say you get a gap down, your gap trade or your entry signal, whatever it is that you're looking for, moving averages are going in the right directions. You're from a supply. Now this is the highest probability trade that we want, is a number 4 for a short. So 1 long, 4 short. That's what we want. And then the same thing, more likely it's going to go down. It's going to find this demand level because it's already come up here in supply, and it already says we need more stuff. Can it go up? Sure. And then do we really want to take a short right here? I would say not to. I would say this would be the one we want to wait until it breaks, or if it starts to reverse up and do another 2, then we could take a 2, or we could take it, but I would not want to take this one here. Although I have before, and I got burned all the time. So that, basically is a 6B. So that's basically the life cycle of the trade. Now what I've done here is I've labeled them. So you've got, now I've changed the G to a C. So instead of group 1, because it got a little confusing with my other groups that I had in the settings, because I have different groups, and group A, B, C, and then I got 1, 2, 3, and blah, blah, blah. So I says, so we're going to change that. So actually this is an old, I should have changed it before, but this is done many months ago. Anyway, so there's C ones for chart. So it's chart 1. Now chart 1, you could define anything you want. I typically define chart 1 as my current primary chart. That's what I'm trading on. And typically that's going to be the 30-second, or if you use a 1 minute or something like that. And then as you go up, my chart 2 is going to be a 5-minute. You can make it a 3-minute, whatever you want, but 5-minute, I have it all programmed out. It's got a 5-minute, 15-minute, 30-minute, 60 minutes, 240, which is the, the 4-hour, and then the daily. Now, I don't really use, for day trading, I really haven't used anything more higher than the 60-minute, only because it's day trading. But I do want to kind of, at some time in the future, I do want to start doing these overnight things, which are, forex and stuff like that. If we get into that, I used to do that a long time ago, but I just had to go to sleep and I couldn't watch it. But maybe sometime in the future. So that dailies would come into play, and this is all going to come into play a little bit as I continue further. Okay, so where did I make? Okay, so the same thing there. Okay, so multiple time frames. So the only thing really that's different here is now you see it's a group 2 or chart 2. It's chart 2, 1, 2, 3. So it's labeled, chart 2, or I'm just going to say group 2 since it's called that now here, and I'll change it in this PowerPoint. But needless to say, so group 2, and then we have 1. And if it were on the 3rd chart, you got the idea. It'd be group 3, 1, group 3, whatever. It doesn't matter. So that's how, let me go back. But that's how the algo sees it. Now, we could see it on the chart. We don't need to label them. But Helix has serial numbers. All these are labeled with serial numbers because it needs to know what it is and what time frames and things like that. So that's why I just have serial numbers internally. But, if you're doing it manually, you don't really need to plot those. It's not necessary. Okay, so multiple time frames. So let's say we got, group 2 is a higher one, and you've got, group 1 is over here. There's small, fast one. Well, if you're right here, I forget where I was going with this presentation, so I got to look at this, but I got to study. This has been done a long time ago. Forget it. Let's just go on. I want to get to, let's see. So anyway, you got the idea with basically what I want to show you is my 1, 2, 3, 4, 5, 6. That's probably the most important thing. Once we get into like a gap or something like that. Now, see, for instance, right here, this is a good one. So this one here in the primary chart, 32nd, if this is the supply here, then, and we're going into it, so this is going to be a 3. So 1 down here, 2, 3, and you could have multiples. This could be a 1. This is kind of a 1. This starts to be a 2. This is probably a 2, but this is a 3 for sure. You know, but if you look here in the big higher scope of things, this is a higher time frame, and we're not there. We're down here, so we could be blowing through this. You know, it all depends in what chart you're looking at and where it's at in perspective of that. So I just give a couple examples here for, you know, quizzing, if you will. Okay, so 5 minutes. Okay, so now ideally, if you have this all down here at the same time and everything all lines up, that's beautiful. I'm going to get past all this, but anyway, the moral of the story is you got 1, 2, 3, 4, 5, 6. Okay, so that's it there. So now let me go show you. Let me put this down. Hold on a minute. Okay, so what I have them color coded here. So starting on the left, top left, I got the 60-minute, 30-minute, 15-minute. The big vertical one is the 5-minute, and then the 30-second is the bigger one down at the bottom, if we can see it. Okay, and I just have them color coded because I don't really need to see, you know, what chart they're from. I just know orange is the 15, and you could change the colors as far as if you. I keep them all the same because if I had like white up here and, you know, black down here, then it's from the same chart. Okay, so basically the 15-minute would have 2 colors. Every chart would have 2 colors, and that would just be too many colors, and it's too much of a candy cane. So I just keep them simple. You could tell the inside ones are the dotted ones, and the solid ones are the furthest point. And basically, what it does is it's finding the pivots. And I'm going to put this on play and let it run, but you'll see how there are some pivots, like right here on this 5-minute. Hold on, let me switch my cursor around. Hold on. Okay, I think it's less dizzy if I don't have all that on. Okay, so it's a little better. All right, so anyway, you can see, for instance, here the 15-minute. It created it from further back here somewhere, and you could see, now this is an anomaly. I mean, who knows? Who could do anything with that? That's kind of crazy. But you can see if you look at this, the 60-minute, you know, it's testing some areas there. I bet you if we had a 4 hour, I have it set up on here. It might even be something from the bigger one. But needless to say, you know, hold on, let me do that. All right, I just switched this to a 4 hour, and you know, you can see it's still coming through here, but you could see how we got one down here. So anyway, I'll just get back to my 60-minute. Okay, so I'm gonna go, where's my timer? Let's go to see how these set up. So I'm not even looking at the 30-second right now. I'm solely looking at this here. So we got to find some tops and some bottoms. You can see here, these are all 5 minutes, the yellows. So now here's let me explain this too. So these are longs because the dots are on the inside and the solid is the extreme. So if we come back down into this area, that could be a nice long. But you also have to remember that we have just entered our supply area. And we've got a little up here already from, you know, earlier, you know, I don't know how far back. But anyway, we got a whole bunch there. And these lines will disappear, just so I can talk about that real quick. These lines will disappear if the bar, the high, open, low, close, the whole bar closes without touching it on the opposite side. So for instance, right here, these bars will stay there. This one here is going to stay there. And if this bar gets underneath here and closes without touching any of it, it'll go away and stop, like this one here. So let's go forward here. So I don't even know how much distance this is here. This is, I can't even tell real quick. But from here to there, you know, that's really not enough. But what we could do is look down here at the 30-minute chart now. So we hit our zone, we came down, and we blew through it. So is that really a blow through? Because just, you know, it kind of touched this zone here. So it kind of went through here. It touched this. It didn't breach this line here, but it got right into there. So had we had an order sitting there, you know, we would have been in. And that's the thing. It's kind of hard to look after the fact. You gotta plan this and have an order sitting there, because sometimes it gets this. And if you were in right there, ooh, it'd be nice. But anyway, that's here nor there. So so here we are here on that 5 minute. We've just hit it, which is right here. So the question is now is it starting to go up? So let me go back to the 30-minute chart since we're in this area here. And let me throw on, let's throw on my zone. Hold on just a second. Okay, so now crap, going too fast. I threw on some zones here and we got one. Okay, a little too fast, but anyway. I threw on some zones here. Now the zones are just made from higher highs and higher lows. Remember, you have to have a higher high and then higher high, higher high. How's it go? There's 4 of them. Higher high, higher low, higher high, higher low, boom. And so that's what this means right here. For instance, the short, it would say, okay, you've broken that, and so here's your line right. I don't want to get into this, too complicated. But in any event, you've got a blue because we're looking for a long here. Now we've kind of missed it. It's a little too late. We really got nowhere to go. So it's set up with a higher high and higher low right here, but it really, put this back on. See right here, okay, I've turned those back off and I'll just do it this way, it's easier. So anyway, you can see right here though, that's where we finally got our long setup. So and there's really no room to go. So this one's got to be, it's got to check for R2T, which is room to target, and be able to see if we're going to do it. Now, if we blow through these, then we're going higher. You can see the little dot here barely, and that's my circle. So anyway, let's and the other thing as far as stops are concerned, you can't have like a little NC 20 tick stop. You've got to be underneath the demand, because that's where it's going to have. So your stop was, if you get in here, if you did get in here, it's got to be down here. So your stop would be like right there. I don't know why it's not showing up here. Whatever. Okay. So let's just go forward. Anyway, that's the moral of the story. So if it could label, 1, 2, 3, 4s, and it could determine based on distance from supply and demand, if there's room and we're on a number 1, well, let's go long. And of course, we're not going to get it down here. We're not going to get it. So we wouldn't want this short. Perfect example is this setup for short because it's a lower low, lower high, lower low, lower high, and it created the down move. That's because it was going down. Right here, you can even see it on the bigger timer. It's going down. But do you want to go short right in? That's we talked about that earlier. That'd be like that's a number 6. So you want a number 4 if you're going to go short. Not a number 6. So we're right in this demand area for a 5 minute. Now, question is, does it hold or not? But needless to say, we're at the demand level on a 5 minute, and this thing is saying go short. Well, we don't want that. We want the long. So here comes the long right there, and your stop has to kind of be under that area. Actually, it was recommended two areas under, but that's just so high for me. But anyway, at least there, you've got to be there. But then, because you got to give it a chance to fiddle fart around, you notice it came back down again, and it just touched this area and said, that's enough, and then off to the races it goes. And now we're in our area. So the question now is, how do you want to handle it? And if I would say it, depends on how much room we have. Let's say we got in there, and we're already at 46 ticks, and we have that. I would say the what do you call it? The algo would just automatically place the target right there, if that were my preference. And of course you can move it, or we could say, what's the minimum? We might say, if there's not enough room for 60 ticks, then I ain't gonna want it. And then we go for 40 ticks, or maybe 45, or whatever the case may be. But we've got to have room to go. Anywho, let me run forward. Okay, you can see how in this 5 minute they're starting to go. So if we're looking at this 5 minute, let's just out of giggles,
order submitted.
Let's just say we put one there. Now, I'm not saying we would want to do that. We probably want to get down to the area and then let it turn around, but I just want to see what happens. If it even comes down for us at all. So it's created another zone. Yeah. Oh, there we go. So let's just grab that one. And now This would be awfully tight, so I would say certainly there. This is why I'm saying you really want to kind of wait for it to turn around instead of just jumping in with the limit order. And this is where we really got to decide, you know, what's the best method. Do we want to wait for a gap if we use the trigger lines? Right now I don't have any indicators on here at all, but this is just price action. That's it. So if we have trigger lines on here, we could wait for that. We could wait for, I have a direction. Let's here, I'll put it on a 5-minute. Hold on. Okay, this is my 6.2 directional indicator. So this, I think it's in that somewhere as far as logic of it, but needless to say, I can give it. Anyway, if we have the direction in our way, or in our direction, then we're good to go. See, this is an up direction. So here's creating an up direction, and so maybe that's the signal to now get in. So now we could just get in on a pullback. If we had another, we could even throw in another one there. Maybe even if it comes back down and hits this area, maybe that's another one. Otherwise, it'll cancel out. You know, whatever we want to do, it's here nor there. But I'm waiting for it now. If it blows right through us, then seriously, if it blows right through us, then okay, so we're in, and we don't need to go that far. Let's just do that. Anyway, if it blows through us, then we don't want it. But we have to wait for rather direction or higher highs, higher lows, you know, that kind of thing. And if you notice here on the smaller chart, we got it already. We got a couple of them. That's coming back down to test it again. Okay, well, so much for that. All right. Anyway, I don't know how far that went up, but 66 ticks. So, and again, management's another issue. The point of it is on a 5-minute chart is really more of hiccups. And I find it that if you're looking at, I like the 15-minute, to be honest with you. The 15-minute is my favorite because it seems to give you a little bit more for day trading. Although today, the 1 hour, that's why I pulled up today, the 1 hour was, the 15-minute was just blown right through. So how do you determine that? You know, who knows? Now, if you notice here, the 15-minute is showing this price level here, but if you go to the 5-minute, there's a 5-minute that's set up just so we might want to just go right there. Or if you're thinking of going to center, there's all kinds of ways we could do it. The moral of the story is, if it never comes down to get us, then so be it. Okay, so you can see how we're starting to form a base. So these things, I mean, look at these here. So it created it here, and I like the 1 or 2 bars right after a creation. I've seen it. I can't tell you how many times. You get the creation of a bar, and it just goes right there, and then it takes off. Okay, well, this one's probably not going to get it. So I could probably cancel it. Whatever. Now you can see him starting to form underneath us with the 30-minute. So, you know. Order submitted. Let's see, here's a 15-minute. Yeah. Now, see, look how this respects it right here. Now the question is which one? Now here's a 5-minute, you know, as we're tracing. I still think it might come back down more after it messes around, but needless to say, it went through it and it held. So obviously it's a good level for now. All right, so now this, notice this one is, we already blew through it. This one was solid here and dotted. So that's a supply level. From back here somewhere, right there. So here's a supply level. Now this one just closed above it with open, high, low, close, everything. So therefore it stopped. But this one formed. So now we have a demand level. So, I mean, I don't know if we want to go this far up, but without looking at other stuff, but it looks like we're in a strong up market. So a very strong up market. This is What the heck? I don't know what's going on. All right, so here's 9 o'clock in the morning. This is where we start to tank. And you start blowing through it. Now, this is what I was saying. Now, this is this morning, and I was trying to go long based on this. That's why I wanted to pull it up. And every level, 5 minute, was just getting blown through. And it ultimately came down perfectly to the, I think it was this one, or it formed another one. Somewhere, maybe it was this one. I don't know. It came down perfectly and hit it 1, 2, 3 times, and up it went for the rest of the day. Now, of course, it's retrospect, but it doesn't really do me any good. So the question would be is, how far do we take this? You know, what is our, I know John likes 40. Oh, you already got that, so let's do a little more. What would that be? There we go, sorry. Let's do.
Stop film.
Okay, well, we would have had, whatever, if we would have had a target on there. That's 112 ticks, so I'm sure you got something, right? All right, so it blew through this level now. So it already hit it right here. Remember, the fresh, boom, go. So if we could just capture it right there, that's ideal. Anyway, so then it comes down. It's blowing through this area. So, you know, you can look at the 30-second, you know, if you put it in 1 times speed, you can look over here for any kind of sign of a signal. But it's just going to go down to this level and then blow through that level. There we go. Now there's nice. Now if we had an order sitting there, but again, we don't know we don't know which level's gonna hold. So the only thing I could think of is you go ahead and have an order there, and you take it, and then you have a small stop. I mean, why, you know, you don't have to have it super big. But anyway, it goes to the next level. It takes out all these, I think. Now here's another one. A little taste. So I'm looking for, I don't see any indication here. All I see is short here. So I'm not seeing any indication of a blue yet. So we got to just wait. So let's speed it up. Now you look where we are in the 1 minute. Yeah, in the 60 minute over here. So this possibly could hold, but I think it goes down. See, it blew through this one here. This is a 30 minute, which are pretty similar. Forget which one holds. One of them holds. So we wait. We wait down here. I'm looking at the 30-second. Because any one of these areas could hold. We just got to wait for a signal. There we go. Okay, so I got a signal. So the smaller time frame chart's saying higher, 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 low, blah, blah, blah. And if you notice here, the 5 minute, it's got the up direction. So let's stick an order here.
Order submitted.
See if we get it. I got it. Okay, now as far as stop is concerned, you know, you got to go underneath here, which are definitely a lot bigger stops than and I don't know what we're looking for, but now we could certainly, if we think we're going to go up here, which is what I would think, assume, even though I know what today does, but I still would be, you know, you're going to move it up. You're going to be here now because this level has held right here. So that's held. It might come down and pop us out, but at least we're not going to go with the full one. Held again. So it gives you more confidence, but now you may even be off by one too, you know, if you're doing multiple contracts. Right now I just want to do the one, but if you're doing multiple contracts, you would be out. But you can't go to break even because you're going to get wiped out going to break even. Okay, Okay, so that's 89 ticks, or maybe it's 114 ticks. It starts kicking away. 144 ticks, and it's chasing 89 ticks. Stop. So it's a big one.
Stop filled.
Okay. So anyway, you see we got our directions are going up. We got our, we even got another entry there, if that was the same one. But anyway, that's the moral of the story is. And look how that held. Now, it kind of looks like it possibly could go lower, but the 30-minute held here. So it's respected, which is also the 15-minute. They're kind of the same because they're by quarters. So you can see how this is all working. Anyway, that's probably it for now. So this is what I have so far. That's where this is what I'm doing manually. I'm looking at these manually. And this is without, these is just a Helix indicator, but I already do have it in Helix right now. I only have one level of choice. You can set whichever you want. I have typically set it for a 15-minute, which is orange, but you can change it. You could download it right now and change it. But you can only have one right now. And the problem is the indicator with all this data and ranges and all that, it's really bogging down the system. So I don't know where that's going to go. But anyway, I think that's it. I'm going to keep this short. It's already a half hour, so we'll call it here. All right. Thanks.